You know how the averages hit new all-time highs like they did today? Dow gaining 115 points, S&P advancing 0.37%, NASDAQ climbing 0.56%. I'll tell you how it is done. I'm going to tell you. See, the market reached unheard of levels by triumphing over the concerns that caused money managers to stay on the sidelines, waiting for lower prices so they could buy lower prices that never materialize. You'll often hear that we climb a wall of worry to get to these exalted levels. But today we didn't just scale the wall. We breached and busted through minefields, force fields, and cauldrons of boiling oil. This is a quiet bull market. No champions, no supporters to speak of. That's why tonight I want to go over some of the obstacles that we've overcome, because this list is pretty darn amazing. And the fact that no one, okay, maybe outside of our president on Twitter, seems to be celebrating is down. Right, ridiculous. Challenge is conquered. That's what I call a graphic. All right, obstacle number one, impeachment. Now, I told you that impeachment wouldn't matter. The stock market won't win. That's based on what we saw with Bill Clinton. My handy weakness was a buying opportunity, not a selling one. But it's still impressive that we have a sitting president who's incredibly pro-business. And the House Democrats are trying to take him down. And the stock market's just ignoring the whole process. Maybe they should impeach all presidents. Seems to work out well for the averages. Obstacle number two, recession fears. While it is true that job growth isn't quite so fast as it was a year ago, it's still very robust versus the historical norm. But over the summer, the yield curve inverted, meaning long-term bond yields dropped below short-term bond yields, and all sorts of commentators told us that an inverted yield curve is an irrefutable sign that we're headed into a recession. At the same time, I told you that was complete nonsense. We only got an inverted yield curve because the Fed tightened too far, too many times last year, screwed up. And I explained that the problem would go away as the Fed continued to cut rates. Still, you had tons of investors freaking out, just freaking out by the endless chatter. I heard it all day. I read it all night about how an inverted yield curve equals recession. You can't afford to take this stuff seriously. These people will keep you in your chains. I think part of the latest run has been accomplished because these panic sellers, they capitulated. And then they came back to the stock market as they watched the yield curve uninvert before our eyes.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.